economy can also be understood from the income and expenditure perspective. For an economy as a whole, income must equal expenditure because every transaction has a buyer and a seller. Every dollar of spending by some buyer is a dollar of income for some seller. I hoped all of you can still recall the simple economic models that we have discussed in the earlier chapters of this class. Let us go back to the circular flow diagram that we already have discussed much earlier. The circular flow diagram that you are looking at now is considered the simplest form of models, consisting of two units of decision making, the firm, and also the households. So the green and the orange line indicates to us the flow of monetary units, the money, and the flow of the goods and services. Let us quickly recall what we have learned. In terms of the market for goods and services, the firm will sell the goods and a household will buy. And the markets for factors of production, the household will sell the factors of production and the firm will buy. For example, the household will sell the land, labor, capital as a form of factors of production, which will then be purchased by the firm for the purpose of production. They will use the factors of production to produce, which eventually will produce goods and services, which will then be sold in the market for goods services and will be bought by the household again in this circular flow model. In order for these processes to be complete, it will also involve the monetary circulation aspects. A household will buy, definitely a household will have to pay. So they spend the money. That is plowed back into the market. It is then translated to be the revenue to the firm that sell the goods and services in the market. And the firm will need to pay rent and also wages to the workers, and also will generate profit for themselves. So all these expenses will enter into the market for factors of production because the firm will need to secure the factors of production in order for them to continue producing for the economy. And the household generate income via the selling of their labor. The amount of time they spend in the market, the labor market, which is used by the firm to produce, will help them to generate income, and this income will turn into expenditure or spending made by household, and the process will continue. Before we move further, it would be good for us to understand the two different concepts, which I will discuss in detail later. There are two concepts with regard to national income in which all of you need to know and to understand the difference. One is gross national income or GNP, and the other one is gross domestic product. Gross national product and gross domestic product. So what is gross national product? it basically, in this case, United States of America is an example. GNP basically refers to the value of all goods and services made by our country residents and businesses. So meaning to say, whatever that is produced by the American citizens only, regardless of the production location. Sound indicator of financial well-being of American and US-based multinational corporation. What does this mean? Let's say an American opens a company in Malaysia. So whatever the American earns from the company operating in Malaysia will contribute to the American gross national product. So the key point that all of you need to understand is this particular phrase. It refers to a specific nationality of a person. If we are talking about GNP of America, we are referring to the product, the value of the goods and services produced by Americans only. In contrast, gross domestic product, it measures production inside the country. So the key word here is inside. Inside the country, no matter who makes it. So in the case of this example in America, you can see from the flags that is shown in the picture. So production can be done by Japanese, but the location of production is in America. It could be Italian, it could be Canadian, it could be Turkish, it could be German, whatever. Different nationalities of producers. As long as the production is made in this country, it contributes to gross domestic product. So in the case of Malaysia, no matter who produces the product, as long as it is produced in the country, in Malaysia, all these productions contribute to gross domestic product of Malaysia. So the GDP is a sound indicator of the health of a nation's economy. So the higher the GDP, the healthier the economy of a country is.